Hello and welcome to my InvestEngine Stocks and Shares ISA portfolio update for November 2024. A lot has happened in the world since my last update, and I did miss October, but I'm looking forward to getting back to the portfolio updates now. The last month or so has proven to be a great time for the markets, with an S&P 500 chart showing a gain of 4.82% in the period 1st of October to 12th of November. I'm sure you've all seen some nice big green numbers in your portfolio. Undoubtedly, the biggest driver of these gains has been the result of the US presidential election, with Donald Trump winning both the Electoral College, 312 to 226, and the popular vote, 75.5 million to 72.3 million. We can see that the S&P 500 is up by 3.48% in 1 week since the election, and whilst it has clearly been a broad market gain for the large caps, there has been some particularly big winners. The most talked about one probably being Tesla, with the stock absolutely surging by over 30% since the Trump victory. As Elon Musk was a key backer of the Trump campaign and now set to hold a position in his administration, it is likely government policy will be kind to Tesla. Moving away from large caps, another segment of the market, small cap stocks, have done even better than the S&P 500, with the US small cap index, S&P 600, up by nearly 6% since the election. These gains will also undoubtedly be partly due to the further Federal Reserve rate cut by 25 basis points to a target range of 4.5% to 4.75%. As a holder of a small cap ETF, it has been good to see these gains come in and the punt on the position starting to pay off. Another important thing to look at as UK investors is the GBP to USD exchange rate. In previous months' updates, I've been mentioning how the strengthening pound against the dollar has led to a lot of the stock market gains not being reflected in our portfolios as UK investors. However, recently we've seen the reverse take place and the pound has now weakened against the dollar by nearly 4% to the point where on a year-to-date chart, it is actually pretty flat. This recent weakening leads to stronger gains in our portfolios as a weaker pound means that you get more pounds for every dollar when those USD listed stocks are converted to GBP. There's so much more I could talk about that has happened in October and the first half of November, but I'm playing catch up here and the US election is the main thing to cover. I'll now jump straight into the portfolio update and as always I'll start off with my main InvestEngine DIY ETF portfolio and update you on any changes I've made and how the components are performing, before quickly going over the managed portfolio as well. To finish the video, I'll give you my thoughts on the portfolio going forward. Remember, these videos are not financial advice or recommendation of what to invest in. Please always do your own research before making any investment decision. When investing, your capital is at risk and you may get back less than what you put in. So looking at my InvestEngine DIY portfolio, we can see the balance now stands at £23,981.63, which is a huge gain of nearly £1,000 up from the £22,995.44 it was at the end of September. So we can really see the positive reaction from the US election and weakening pound here. Turning to the portfolio page on InvestEngine, we can see on the maximum performance chart, my investment return figure now stands at plus £4,319.57 or 28.68%. Switching to the 1 month chart shows a return of plus £479.04 or plus 1.84%. However, you can see that there was a dip in the mid period here before that post-election surge. So we do have to switch to a 1 week chart to see that election impact. And on that 1 week chart, it shows a return of plus £321.71 or plus 3.36%. So an incredible 1 week performance. I've had no further contribution since last update because, as I've mentioned, I've now maxed out my ISA allowance for this tax year with £13,500 in Trading 212, £2,500 in InvestEngine, and £4,000 into my lifetime ISA on Hargreaves Lansdown. That means the increase in the portfolio balance is completely due to market gains and not because of deposits. Moving on to the portfolio breakdown, I've made no further changes since last update, and it still remains at 35% XDEQ, 35% GGRG, 14% UC99, 8% EMIM, and 8% ISP6. Although you can see some deviations from these weightings, which will always happen as some components perform better than others, and I'm not looking to rebalance it just yet as it is still broadly in line with the set weightings, and I'm not really too concerned about small deviations like this. It'll always happen, and it's never a good idea to rebalance too much due to the loss incurred from bid-offer spread. Due to the events over the last week, rather than looking at a 1 month performance of all the ETFs, I'll actually look at the 1 week view in this update, as it's really interesting to see how they've performed differently in this period since the election. First up, the global quality factor ETFs, XDEQ and GGRG are up by £123 and £80.97 respectively over the past week. so good gains for both, but XDEQ has undoubtedly pushed ahead. In the continued bull market we've had this year, GGRG has lagged other quality factor ETFs, with this mainly being due to the absence of weighting given to Nvidia. But I'm not concerned just yet, as I do believe GGRG remains all around a good long-term option for me. In different market conditions, it may well push ahead. Speaking of quality factor ETFs though, there is actually a new one recently added to InvestEngine, the Xtrackers MSCI World Quality ESG, with the ticker XWQS. This gives us another option for quality, and I'll also do a video covering this in more detail soon. But the index it tracks and the ESG filter does lead to some differences from XDEQ. And looking over on just ETF, although we do not have much past performance data to go off, we can see that XWQS has outperformed XDEQ since its inception. But whether that will continue in the future, we can never be sure, of course. It's certainly worth a closer inspection though. Returning to the portfolio, next up is UC99, the USA Quality Factor ETF. Over the past week, my holding is up by 5.03%. As this is similar to an S&P 500 ETF, but with a quality filter, it's unsurprising this has done so well. Next up is ISP6, the small cap S&P 600 ETF, and my position is up by 9.85%. Small caps have performed exceptionally well, and this is by far the best performing ETF in my portfolio recently. It is great to see this position pay off after lagging other components for quite a while. Last in the portfolio is EMIM, the Emerging Markets ETF. This one is the only ETF that is down over the past week, with a small loss of £13.76 or minus 1.98%. This is perhaps due to potential tariffs that Trump may introduce on China, but I'm not 100% sure. I keep some emerging markets exposure for the sake of diversification, but really do not pay too much attention to it. That's the 1 week performance of all my ETFs, and I'll now switch to the maximum view. Remember that with the exception of UC99 that was added to the portfolio in February, the remainder of these ETFs have been in the portfolio since November 2023. However, their weightings have been altered a couple of times. The great thing about InvestEngine is that the return figure at the top of the page includes the realized gains from the previous ETFs held and also dividends received, so you can keep track of your total return very easily. I do wish other platforms displayed returns in this way rather than just profit loss of open positions. I'm really happy with how the portfolio is doing, and we can see that ISP6 and XDEQ have delivered the strongest percentage returns on a time-weighted basis. As I've mentioned, GGRG is lagging XDEQ this year by a fair bit, with returns ranging from 26.9% for XDEQ and 19.49% for GGRG. Now, taking a look at the managed portfolio, it is up by 26.17% since the portfolio started on the 1st of November. Over the past month, it is up by 1.5%, and over the past week, it is up by 3%. So it has slightly underperformed my DIY portfolio recently, but not by much. Whilst InvestEngine's decision to use a GBP hedged S&P 500 ETF has led to outperformance in prior months, as the pound has been weakening recently, the use of the GBP hedged ETF will have the opposite impact now, and it will underperform non-hedged portfolios. So like with most decisions when it comes to investing, it swings and roundabouts. I actually can't share anymore how the individual ETFs have performed in the managed portfolio, as there does seem to have been an update that stops us from seeing their individual performance, unfortunately. But I would imagine it is pretty green across the board given the state of the market. The XDPG ETF at the top here is the GBP hedged ETF I mentioned, and that will have underperformed the non-hedged SPX5, I imagine. There's not really much else to show here, but I do like to give just a quick glance, as I know it's interesting to see how the managed service is performing and the ETFs included. If you like the sound of having your investments managed for you and having a completely hands-off approach, then it may be worth looking into the IE managed service. They do have a very reasonable fee of 0.25%, and so far I am quite happy with their ETF selection and how it has performed. So that's the update, and to finish the video, I'll just give some quick thoughts on the overall portfolio and my thoughts going forward. I've no plans to change the composition of the portfolio at the moment, and it really is hands-off at this point, given the fact that I cannot make any further contributions until the new tax year in April. Whilst I have been investing inside a GIA over on Trading 212 in recent months, I may also start contributing a small amount to the InvestEngine SIP, but I am undecided at the moment. I do have a lot of one-off expenses in life at the moment that I need to get out of the way, so contributions may be on pause for a little bit. I am really happy I've been able to max out my ISA allowances so quickly this year though, so I think I can cut myself some slack if I cannot contribute much in the coming months. I do also want to very quickly mention the impact of the budget we had in the UK. I was thinking of making a dedicated video, but I don't really think I have anything interesting to add on that has not already been said, and for me personally, it does not really change my investing habits or strategy at all. I'll keep on doing what I was planning before the budget. Whilst there was undoubtedly some negative points points for some people, overall I don't think it was as bad as everyone thought it would be. That is it for this video. Overall, I continue to be happy with this portfolio, and apologies for not uploading too much recently. Life has been a bit hectic. Let me know how your portfolios have been doing in the comments below, and if you enjoyed the video, please consider leaving a like, and I'll see you in the next one. As always, thank you for watching.